Yo, welcome back to another episode of Mailbag Monday by the Money Matters podcast. I've got Dollar Bill. I've got Dylan. Gentlemen,
Good morning.
good
Good morning.
morning.
Good morning. How we doing, boys?
I'm good. But we had a 50 basis point rate cut since we last talked to the fine audience. And I think Bitcoin's rallied just a bit. So, Dollar Bill, what's your assessment?
I'll start. With long term, our stance is that the story is dollar debasement. So if it's priced in dollars, we want to trade it from the long side. And I support that stance by just tracking any asset class I can find. But the major ones, I'm going to look at precious metals, real estate, the Dow. The Dow, did you know the Dow on this day last year was 34,000, now at over 42. That's a 25% year in the Dow. Awfully good year. You don't even need to use leverage there to have a strong year in the stock market. But compared to gold, look at gold. On this day last year, gold was 1,915, now over 2,600. That's a 30+% increase. Real estate, likewise, dragging a little bit. I got the Case-Shiller index up 4% year over year. Those are three very different asset classes: gold, precious metals, real estate, and the Dow, all showing strong percentage year over year gains. And in the face of that, and oftentimes at record highs, yes, we have reduced interest rates. We cut interest rates. At this time last year, we were 5.25, now 4. I mean, it's a blended, right? We look for a blended range, 4.75 to 5. We are blending at about 4.8 right now. So yes, we are reducing interest rates in the face of double-digit percentage gains across any asset I can find. The only thing that isn't disturbing this scenario, as you know, is CPI. The last CPI print we got was better than expectations at up 0.1%. That's year over year, 2.5%. So I know I'm talking to Bitcoiners who, tend to be critical of monetary authorities. But if I'm running the show here, I got an enormous amount of government debt, an election year, and pretty much all the good assets are going up, the Dow and real estate and everything. But consumer prices are not. I'm asking for a raise right now if I'm running the show right here. I know you guys, I know I'm talking to Bitcoiners. They're like, what are you talking about? Jerome Powell's a criminal. They're debasing the currency. They're enabling an unbelievable amount of debt, and they're possibly even politically motivated. What are we doing? We're trashing the dollar to save our jobs. I know I'm talking to Bitcoiners, but frankly, I'm not seeing that. Like I said, I'm seeing a job well done when I'm looking at this screen. I am, like I said, trading from the long side and not even really trading, just properly positioned and we now have 43 days until the election. And as you know, my opinion there, monetary authorities do not like to insert themselves into politics, and especially in a contentious year like this. I think we're on holding. Monetary authorities on hold. Markets are in charge, and they're doing what markets do when left to their own devices. They're going higher. I am still, like I said, I'm having a strong year, and I'm not even actively trading. I would then, a lot of times, I want to turn over to you because you guys are the ones going to conferences, talking to customers. Are you seeing the same thing I'm seeing? Because, like I said, I'm seeing another 43 days to the election with, strong uptrends across multiple assets.
Well, you said a couple things here that I want to drill on. Monetary authorities not participating in politics, I think, is part of a conversation we want to have a little bit later. But looking at my Strike app, Bitcoin is up 10% since September 16th, which is exactly 1 week ago. And we saw some news and some movement that kind of lit up, I would say, like macro econ Bitcoin Twitter, but it didn't light up Bitcoin Twitter, at least in the way in which thought it would, or at least I thought it should. And I'm curious your opinion on this, Bill. But we saw the approval of options on BlackRock's Bitcoin ETF, and there's a wide range of opinions on what impact this will have on Bitcoin's price. Anthony Pompliano, for example, seems to suggest that BlackRock's Bitcoin ETF will bring more institutional adoption of the asset, which will lower volatility and limit explosive upside of Bitcoin. Bitcoin will be a great asset going forward. Just don't expect the same returns as in past years. I was just curious, what do you think of this?
I mean, I'd have to ask him why he thinks, yeah, it's good. It's good for the ecosystem. It brings more liquidity. It brings more access. Risk management products, a lot of institutions don't want to build their position at local Bitcoins the way we used to have to do it, right? They want reputable ways to manage risk and address the market. I'm confused on why he thinks that's going to limit upside. I can't really respond to that because I don't understand how one follows from the other. Yeah, we're bringing in more institutions, more visibility, more access to this market, but don't expect explosive upside. I don't see how the conclusion follows. Like why? In order to address it, I have to ask you why you think. I mean, the whole thing. Look, I understand Bitcoiners' natural tendency. After all, China bans Bitcoin. The IRS. If you're a Bitcoiner for long enough, you've probably been harassed by the IRS. You've probably been possibly even thrown out from your banking account. So I understand the natural tendency to think that monetary authorities are going to try to suppress this market. But the idea that an investment firm would introduce a product in order to cap something makes just no sense. In the history, if you're worried about manipulation, let me put it this way. If you're worried about big financial players playing games with your market, name one where they suppress it. They always try to squeeze it, right? From whether it's GameStop recently or, the Hunt brothers, generation ago, your big speculative money playing games with price manipulation, there's really no money in suppressing it, right? Try to imagine, like, get together, whatever you do, don't let this market rally. Well, there's no money in keeping a market at unchanged, right? There's no financial incentive, as well as you got to take all the reputation risk. Plus another thing, these guys are all long themselves. They're all bullish. This is a great market. If you're in the investment world, you want these products. The last thing, you don't want to trade against your own customers, right? Try to imagine, everybody's on the long side of this market, right? It's the best performing market you've seen in your lifetime. Why would I want my investment? Why would I, to try to attract customers and design products for people that want access to crypto? And then on the other side of the hall, my traders are suppressing the price. It just, there's no incentive to do it. I think in the history of these types of things, they're almost always, if there is any manipulation, it's looking for some way to squeeze something or corner something, right? Not suppress it. There's just no money in it. There's no money in keeping a market at unchanged.
Jack, you have any thoughts on what Bitcoin options trading would look like for the future of Bitcoin's price, its volatility, etc.? Have we found, is the Bitcoin price going to stabilize across time? And, if you get into it now, you're looking at 5%, 6%, 12% returns year over year?
No. I don't know what Pomp is talking about, so I don't know how to address his opinion, but
right, I'm with you.
Yeah, to imply that to achieve price stability and remove any upside volatility was options. That doesn't make any sense. Honestly, I don't want to offend Pomp because he may be misquoted or maybe taking it out of context. But if he's implying that options contracts remove all upside for Bitcoin, that's moronic, and I'm being polite. So no, I don't. I don't think that makes any sense. I mean, I pulled up the M2 money supply from the St. Louis Fed's website. I've said that Bitcoin is the best expression of fiat debasement. So now for those watching on YouTube, I'm sharing my screen. For those listening, unfortunately, you're just going to have to follow with me. But what we're all looking at is the M2 money supply from the Federal Reserve themselves. And so this is, a really fairly accurate assessment of how many dollars they're issuing, dollar liquidity. And so we can see from when Bitcoin was invented until early 2022, it was a shrieking bull run. I think that when someone like Pomp says returns are getting lesser, the law of larger numbers, they're really not factoring in. This was the largest dip we've seen in M2 money supply ever. I mean, it was the fastest rate hike of all time, right? And look at the retraction in M2 money supply. And so my expectation is that this breaks to the upside, right? And we are starting to see that. Powell is reversing rates. I think that the debt. So my position is Bitcoin's is technology plus fiat liquidity. Bitcoin is the best expression of currency debasement. Bitcoin trends with this chart. And so if Pomp is to say Bitcoin's going to have lesser upside, then he's implying that this M2 chart is going to flatten or continue to decline, which I don't believe. I don't think that that's sustainable. Bitcoin aside, I don't think this government can, I've already said this, I don't think this government can sustain these debt levels without printing currency. The only way to sustain the fiat system is to continue to debase the currency. So I don't know what anyone is talking about. As far as options, the one thing I'll say is the freer the market, the better. So the more you allow anyone to speculate, the better price discovery, the better price efficiency. So I think it's a phenomenal thing for Bitcoin. It's very bullish. It's very exciting. You're going to get new market participants. You're going to get new price discovery from existing market participants. So markets want to be free. And so the freer the market, the better the market. And Bitcoin continues to find itself being expressed by all sorts of market participants all over the world with all sorts of different market vehicles. You've got futures, you've got options, you've got ETFs, you've got spot, you've got P2P. So this is natural evolution. I think it's a phenomenal thing. I don't know what Pomp's talking about. And I think that Bitcoin correlates more with the M2. If you think the M2 is going to go higher, then Bitcoin's going to go higher.
Yeah, there you go. I mean, the chart's right there in your face about it. It was a pretty big week, I would say, for BlackRock in general. Larry Fink, I know, set Bitcoin Twitter on fire a bit when he mentioned that he was wrong about Bitcoin. I think that definitive of a statement coming from someone as influential in financial markets as Larry Fink is an extremely powerful support for Bitcoin. Do you think you'll see this trend continue over time? These large asset operators that were once, bearish, very dismissive, continue to come out in support of Bitcoin?
Well, I mean, first things first, the fact that, when Larry Fink says really self-effacing, really humbly, just says, I didn't get it. And whoever's interviewing him says, hey, I'm with you. I was skeptic too and stuff. If you're listening to this podcast, and certainly I know the majority of people I've been, that I talk to in the Bitcoin world, if you found Bitcoin, whatever, 4 or 5 years ago, much less, 10 or 12, then you beat BlackRock and Fidelity. That doesn't, and right, like I said, unless you happen to live down the hall from Mark Zuckerberg or something, you're rarely going to get that kind of lead on a speculative trade. So first things first, congratulations. By the time one of my dad's friends, the senior's friends, used to always say, like, why don't you trade stocks? Why are you always a futures guy? He goes, Billy, by the time, somebody has discovered it, a venture capital has marked it up and handed it off, to professional, to institutions who have marked it up. And then by the time it gets to retail, it's been marked up so many times, there's just not that much profit left in it. So no, no, I'll just leave it there. I think, yeah, no, man, like I said, first things first is right. Congratulations on finding an asset before BlackRock and Fidelity. Yeah, this should be, I'm positioned well, and you guys are running a brokerage firm. Yeah, welcome. I think Bitcoiners always have that kind of want to be a little bit snobby about here comes Wall Street, or a little bit, intimidated by that, or like I said, almost kind of like attitude about it. But there's nothing you can do about it now. This is the best performing asset. And yeah, here comes Wall Street.
What was the question, Dylan? Is this going to keep happening?
Yeah, are we going to get more and more asset managers just get on and just mea culpa, like, boy, I missed this one? I mean, that's the difference, right? I mean, that is one of the really attractive things about this industry, is when you're wrong, you don't get to rewrite it or blame some or fire somebody. You got to walk into the pit and cover. I'm sorry. Right. I've been putting, so yeah, Wall Street is I think a lot of those guys are in a tough spot to have been skeptical about it, and watch, like I said, a bunch of guys in a local meetup group just beat BlackRock on the best trade of the decade. Yeah, so you gotta. I think that's really speaks well of those guys, that they are approaching it, as opposed to, continuing, with the rat poison squared, and nothing backs it with all those trite and tired arguments, which are, clearly the market is disagreeing with. No, I think that's healthy, right? I mean, that's the world we're from. Nothing and nowhere to hide. When you get something this wrong, yeah, you gotta walk into the pit and cover it.
Yeah, well, that's just the way it should be. Bitcoin doesn't allow the elites to sip from the spigot. I remember growing up and all of our buddies were like, I think you're wrong because the Wall Street Journal said you were wrong, or I think you're wrong because my professor said you were wrong. And that's not the way we want the world to work. Like, the world shouldn't be defined by those that are elite, or those that are elected, or those that are special. It should be free markets evaluating, and people taking risks on their own merit. And so I don't know. Do I think it'll keep happening? In what context? Do I think the people that are wrong about Bitcoin will admit one day they're wrong? Probably. I don't know, unless they want to die with demons. But yeah, I would assume.
Put it this way. When you're stuck, when you're wrong with your subprime debt trade, do you go cover it? No. You go call Arthur Andersen and have them jigger the numbers, and then hopefully bundle it with something and dump it on some European pension fund. No, but when you're wrong, Bitcoin, sorry. It's open, free open source. It's all on the blockchain. You're on the wrong side of the market. You just got to go in. I think you're right. Bitcoin is really refreshing, that you cannot really hide your losses the way Wall Street typically tries to do.
Yeah,
open source.
Interesting point, right? Is that, like, typically these financial titans, at least in my sort of retail opinion, have always come out and said, no intrinsic value. It's a worthless financial tool for speculators and gambling and drug addicts. And, that's all well and good. People can have their own opinions, but now you have this financial titan who's saying, hey, this is a useful financial tool, and it will be for hundreds and hundreds of years. And now there's this kind of, collective counter argument growing in a more institutional and in a more sort of impactful way to those types of people. And I don't know, I find that to be interesting and relevant, that Larry Fink happens to be sort of one of the first ones to have done that.
The first ones? Saylor had to come out and say, I fucked up. Larry Fink joins a long line of people that admit they're wrong, right? Or what do you mean?
Like, just of that caliber and of that esteem. I think what Michael's done is
I guess, dude. I remember once upon a time when Eamon Gunsarer, who was a professor at Cornell, admitted he was wrong about Bitcoin. He's now a shitcoiner, by the way. But at the time, we were like, wow, a professor at Cornell, that guy teaches those that run the world. That's so crazy. So everyone gets even more like, you know what's going to be crazier than Larry Fink, Dylan, when the Democrats admit they were wrong, right? And then so there's always the next up. Bitcoin continues to climb the ladder. But I don't know. I mean, also, by the way, like as soon as Bitcoin advantages you is usually when your opinion changes. So, you know, Saylor was sitting on his high horse on his little keyboard and was like, Bitcoin's for criminals and drug dealers until his company was failing. Then Bitcoin was pretty interesting, right? And so same with Larry Fink. Well, Bitcoin's for criminals and it's burning the earth and everything. It fucks up everything until dollar debasement is reaching levels where in which all of his clients and his customers need an exit. Then it's not for criminals. It's not burning the earth at all. So, you know, eventually Bitcoin benefits you. Seriously, like Saylor didn't have very nice things to say until he looked at the COVID crash and realized his company was going under. Then he had great things to say. And that's not a criticism to Saylor.
I didn't know he was a cynic. I thought maybe you're right. Maybe he's just too busy to, he needed, I think a lot of people.
Yeah, but I think that's the
pandemic to get caught up on things. But
that's the reality of the world that we were living in before Bitcoin. If you're an elite, if you're a CEO, if you're a professor, if you're an executive, then you can't be told what's interesting. No one on the street can get something right before you. We live in like a social hierarchy that's predetermined and defined by the fiat spigot. And so Saylor couldn't be bothered to listen to something about Bitcoin until he had to. Fink couldn't be bothered to listen to anything about Bitcoin until he had to. But it breaks everyone's minds because you're supposed to go to college, get on your knees, suck up to your professor, go get an internship, suck up to your boss, go work 9 to 5, suck up. And there's no free market opportunity for humans to collaborate, take risks, innovate, disrupt. And so this just, it's classic. It's classic. But Fink couldn't be bothered until his clients and his customers are like, hey, this level of debasement, I don't care what interest rates are. We're debasing our way out of this thing, and I want to own Bitcoin with my gold. Now all of a sudden Fink's like, I guess it doesn't burn the planet and boil oceans and finance criminals. So I don't know.
That was Satoshi's big mistake. Is he used a full 9 pages to write the white paper. He should have put a little TLDR so these people could pick up the concept in less than 10 years. Now, I don't know why it took the people that are, you know, the masters of money of this world and deservedly so long to design products. But I mean, a lot going on, right? And weren't the Winklevi were trying to get ETFs up something like 10 years ago. It's just is a lot of work to get done. And finally, we just no, it's too bad that the industry that was bootstrapped at the grassroots level now has to rely on people that Bitcoiners are naturally skeptical of, right? Big Wall Street titans in order to advance the access, because that's been the big problem is how do you get access to it? I mean, right? Remember your first Bitcoin, you're writing down seed words and securing it and backing it up, and hopefully, you know, it is not an institutional friendly asset to acquire years ago. So maybe it just took onboarding time. But I'm surprised it took so long for the Larry Finks and the Fidelities to arrive.
I disagree with that, though. I don't think we rely on them. They rely on Bitcoin. Like Bitcoin, you're not as valuable as you think you are. Like you need Bitcoin more than Bitcoin needs you. You know, yes, Larry Fink is helpful to Bitcoin, but so are the three of us. But do each of us need Bitcoin more than Bitcoin needs us? This podcast could never have another episode. Bitcoin wouldn't give a shit. Right? So I think Larry Fink needs Bitcoin far more than Bitcoin needs Larry Fink. If Larry Fink were to not exist tomorrow, Bitcoin would be fine. Larry Fink wouldn't, obviously. So
I'm telling you, no, in the history of investment, anytime, a grassroots bunch of cypherpunks can get a 6, 8, 10-year lead on the best, on the best of the best in Wall Street, which is, BlackRock, Fidelity, etc. Right? Congratulations. No doubt. This is kind of a miracle.
Yeah, but it's a really important ethos to embody, is that I need Bitcoin more than Bitcoin needs me. That's a very humble thing. I think of Bitcoin too as the great humbling. Is you have to say, I want to be part of something I can't control. I want to be part of something bigger than me. I want to be part of something where my contribution, it pales in comparison to the greater movement. I want to be part of something where I'm not the main character, where I'm not the boss, where I don't have influence. And those that have an inability of coming to that position and stance then have to buy in later and get these humbling moments where Larry Fink's like, yeah, shit, I was wrong. But it is the great humbling. It teaches humility. Really, in my opinion, I've said this before, adopting Bitcoin is an ego test. So how much do you value the greater innovation and the betterment of humanity for everyone else versus yourself? Because just saying like, no, I'm right, the world is wrong, is just validating insecurities that you have. So
remember early meetups when, some of them even hosted right in our front room, and there'd be whatever 10 or 12 guys there. And as Bitcoin was starting to get attention, you would occasionally see, like, we'd see an employee from the exchange, from CME would be there. Like, wow, what are you guys here? All right, same reason you're here. We're just trying to figure out if there's an angle, there's a way to make money. You'd run into other finance guys, but I never ran into anybody from a brokerage, from a big Wall Street type firm. And they obviously have Chicago locations, right? I think it's funny that the forward-looking people that were going to these grassroots meetups did include exchanges, traders, guys that came up on but I never remember Wall Street there, right? I know, I'm here from Merrill Lynch, just my boss sent me to just get educated. Never. But I'm here from CME. Yeah, I'm here from DRW Trading Group. Right. Those guys were all over this early, but I don't know. Wall Street missed it. I doubt they'll make this mistake again. Yeah, but I don't know. If you grow up right in that world and somebody says, hey, my cousin's son is making a lot of money on this thing, maybe we should check it out. I'd be like, what? The Silk Road coin, or now the rat poison square thing, right? I mean, it would just never, there was not a lot of natural traction, amongst the Wall Street class. Now, I'm surprised it took this long as well, but no, they're here now.
I'm not. I really am not. I mean, it just got like Bitcoin will highlight who needs to be humbled and who's built their life view based on social hierarchies and bosses and presidents and executives and fiat mindset. Like, it just doesn't shock me. Wall Street's built on lies, deceitful, insider trading, penny stocks, paying off regulators, sucking up to government. That's what Wall Street is. That's what it is in the movies. That's what it is that's what Wall Street is. And so they're going to be last to understand the free market, cryptographic, technological movement from the ground up. Bitcoin just like highlights the truth that is. And if you need to be humbled and you don't have the humility to adopt it, then you get punished. So every single asshole and piece of shit that views themselves over the rest of the world and needs to be humbled will be last. So for those that haven't adopted Bitcoin yet, think for a second what it says about them. In my opinion, if someone's outwardly against Bitcoin, attacking Bitcoin, claiming Bitcoin's only for drug dealers, claiming Bitcoin ruins the world, sit for a second, take a deep breath, do some breathing exercises, and think for a second what that says about that person, given the context of this conversation. And it's beautiful in that way, where if you're a selfish asshole, then you get the best performing asset last.
I like it. I see both sides here, though, for what it's worth. I mean, the returns themselves, I feel like should have inspired at least a little bit more diligence into this financial technology a bit earlier. But at the same time, yeah, does Wall Street getting Bitcoin late surprise me? I think I tend to lean a little bit more on your side of the fence here, Jack. Bill, you said something earlier that politics and money authorities, they can't mix, or at least it would be very bad. It'd be an extremely bad precedent for all of us, for the United States of America, for the dollar as a world reserve currency, and for the world by proxy. And we saw a 50 bips rate cut days before an election. Now, Powell in that meeting maintained that there was no political impetus behind delivering that rate cut, but it's hard to ignore the fact that, Trump made clear that he would not reappoint him as a Fed chair. It's hard to say that there's not some incentive, or at least there could be some incentive to deliver this rate cut so soon to a presidential election. I'll park that sort of topic in that conversation. First and foremost, I want to hear from both of you guys. Is this good for Bitcoin? Is this bad for Bitcoin? Jack, you seem to suggest in earlier podcasts that they could hike rates, they could lower rates. Everything's good for Bitcoin. But I'm curious both your opinions on Jerome Powell delivering a 50 bip rate cut on Tuesday, I believe last Tuesday it was.
I agree. I mean, you seem to kind of set up the answer, the cynical part in the the way you phrase the question. There is on the eve of an election, a 50 point, it does seem to have, particularly when one of the candidates has vowed to fire you, that does seem politically motivated. Sure. What are you going to do? Like I said, I would not want Jerome Powell's job right now, right? You've got a record indebtedness, a tense election year, a lot of inflationary signs that just haven't, hit the CPI yet. But, like I said, gold up over 30%. That is going to be a thread the needle type of job to get out of this. You're right. I don't understand why you would want to do that job in this environment anyways, right? But yeah, the quicker you can get through this election, I think that the better that monetary authorities can, try to hit their inflation targets and try to balance, the growth. But in the meantime, yeah, I think every monetary authority's got to be sitting on their hands. You just don't want to insert yourself into this. You need, the whole financial thing has to run on confidence. If at the moment the market has drawn the conclusion that you are compromised, that you're running this monetary policy in order to help an election result or, tinker, then, markets are going to lose the confidence. That's basically an advertisement for gold, right? For hard assets and not financial assets. I think the markets are on their own. I don't see any, any monetary discipline unless something, like I said, if you get something external, the war in the Ukraine, the supply chain, the famous West Coast fault line moves, and we are disrupted and ports are closed. All right, now I need monetary authorities to inject some liquidity to keep the system going. But other than that, it's hard for me to imagine any type of either way, easing, tightening right now. Like I said, I would not want to insert into this because that's going to cost you confidence, and monetary authorities need confidence to manage, this mess.
Yeah, I mean, I don't know. I think that it doesn't matter what direction rates go in. They've both proven
that too.
They've both proven to be inflationary. Like we lived through the Fed was at like they did fastest rate hike ever rates over 5% for 18 months, and Bitcoin went from 20,000 to 70,000. So clearly high rates don't mean that it's bad for dollar liquidity. As soon as the 10-year got to 5%, Yellen came in and slammed the hammer and juiced assets tremendously. So the point is that the U.S. can't afford rates to be very high or go very much higher, because it forces other countries are going to sell their treasuries and their dollar debt, and we can't sustain that. And then obviously rates lower is obviously very bullish for dollar liquidity. So either way, it doesn't matter. The point is there's record amounts of deficits. The point is, back to, I always like the debt to GDP.
Hey, I can't ever let you finish that thought without cleaning up. The fastest rate hike ever is the fastest rate cut ever in your life. But that is what like you say, the market was expecting maybe an incremental 25 basis points and they got 50 basis points. How about the time Volcker did 300 basis points on a Saturday night? So you couldn't even manage your position. Kind of his way of saying, I'm in charge now, you guys. And we're gonna end inflation. I'm gonna do it, whether you right, but I'm not going to do it incrementally and gradualist the way this administration. But these monetary authorities have an enormous amount more debt, and to service, to sell, and with the politics, but everything. So I can never let the guy go like catch your breath. That was a shocking 50 basis points. I have seen 300s. You can actually shock markets a lot more than
it was the fastest hike ever. Is that wrong?
I don't know what you mean by ever. But no, we had
from zero.
Google it. Lieteau, Saturday Night Massacre, Volcker. I think he did it on a Saturday so that you couldn't even manage your position. And I believe it was 300 basis points, right?
I thought it was, well,
yeah.
We won't waste. I don't have too much time. My point, what was the point I was going to make?
No, you think that the degree of that thing indicates some type of maybe panic even or distress or concern, and I just not, these markets just do not, or maybe possibly like you're looking for the government to have an inability to sell their enormous amount of debt now that Powell has hiked interest rates, or I'm sorry, that is somehow going to help with the with the financial situation. It's just not that dramatic of a move. I think it is. No, it's impactful that it's not a quarter point. It's not as gradualist and incrementalist as they have been, but it's a far cry from panic and a far cry from distress that I see.
I think the accurate answer here is that the 2022 to 2023 rate hike was the fastest in history on a cumulative basis. 525 basis points between March 2022 and July 2023.
Okay, so not the last. Okay, yeah, I mean, there's not a lot of precedent for what happens after you lower rates to zero. We've never done that. So yeah, I guess you're laying the groundwork for the fastest hiking ever because you've put them at zero for 18 months. I don't know, maybe a little bit of everything, but for me, my perspective, I do not think that the monetary authorities, that the Powell Yellen have done some terrible job here. I think they're doing everything you can to manage this mess. And like I said, if I'm got that job and I'm looking at those numbers and that performance and the economy is still avoiding recession, and then I'm asking for a raise right now. I'm not whatever candidate is going to come in and fire everybody. I don't know. You're going to get somebody that's going to do a better job getting rid of this much government paper and still keeping. I know gold is worrisome. I definitely agree with that. But everything else is, I would say, the best you can do with all that with the fact that the numbers are so ugly, and you just got a lot of government paper you got to get rid of. And you can do that in keeping CPI at 2.5%. I just don't. Like I said, if I'm Powell, I'm asking for a raise.
Yeah. Sounds like the advice remains: get long, get paid. Transitioning things here to our final topic, Jack, you had a podcast release this week with Rick Rubin. For the audience that does not know, Rick Rubin is probably one of the most influential people in all of music, and is certainly one of the greatest of all time, undisputed when it comes to music production. A lot of people want a little bit of a peek behind the scenes, and I figure if I have the guy who actually was on the podcast, no better person to ask than you. So can you talk a little bit about how this interview came to be? How did Rick receive the information about Bitcoin? Was he orange pilled by the time you left? What was it like orange pilling Rick Rubin?
I don't know how to answer that without revealing information of my personal life that I don't want to. I met Rick through Jack, and yeah, I really enjoyed being around him. I've met a lot of cool people in my career at this point, and there are only very few that feel like you can feel their presence in a room. Usually what happens is you meet someone and you're like, oh, wow, it's a good reminder that we're all human. Like when I met Saquon Barkley, he's this superhuman athlete on the football field, but then when you go to dinner with them, or when you hear about how he's trying to get good at the game of chess or something like that, you realize, oh, we're all just human beings, and he has emotions and interests and failings and succeeds at things just like I do. Rick, very rarely do you have like these larger than life figures that feel profound just being around them. And then when they walk in the room, you can feel the energy change because their presence is just so, I don't even know how to describe. So that it was really incredible being around Rick. He's super inspiring, but that's all I'm really going to say. It's not, I'm not going to gossip about my personal time with people.
So if you're a professional athlete and you adopt and take the time to understand and adopt Bitcoin, then you get to score 4 touchdowns. Didn't Saquon have some breakout? Didn't he have some awesome game? Or I watched a lot of football over there. Didn't he have some terrific game this weekend?
Yeah, I think Saquon, we're only 3 weeks in the NFL, but I think Saquon's the leading MVP candidate, in my opinion. You can make the case for maybe a few others, but he's got to be up there. Do they have
athletes perform better when they're not being debased? I think is the point.
MVP betting odds NFL. Let's see if Saquon's up there. Yeah, it's still too early, unfortunately. They still have like Patrick Mahomes as the favorite, although he hasn't played.
What is it? Not a quarterback, right? It's almost always quarterback, right?
Yeah, but anyway, no, Saquon, yes, he's doing well. He's out of New York. He's doing well.
Congratulations.
Well, to him.
Right.
Yeah.
Without getting too personal, are there any takeaways from meeting Rick that you're willing to share?
One of the biggest takeaways from hanging with Rick was his perspective on the creative process. The beauty of creating comes from doing something purely for yourself, not for an audience. He emphasized that when you're making art, whether it's music or anything else, you should create for your own fulfillment, following your intuition, your passion, and your taste. Once you feel that what you've created is complete and meaningful to you, only then do you share it with the world. If people love it, that's great. But if they don't, it's important that it doesn't really matter. What truly matters is that the work came from an authentic place within yourself. What was crazy for me is this isn't just true for art. but it applies to life as a whole. Even when you work on yourself, you should follow the same principle. Do it for you. When you genuinely focus on self-growth for your own sake, the version of yourself you share in relationships or business or family and everything else becomes much more powerful and authentic. That was probably the main thing I walked away with. A lot of clarity and confidence in trusting my own agency as a guide through life. It seems like an obvious point, but I couldn't believe how often it gets lost, at least for me.
Thank you.
Yeah.
That's awesome.
Rick's great. He was phenomenal. And I really think he did a good job with the conversation. It was probably one of my favorite interviews I've ever done.
Cool. I'm out of questions.
Okay, cool. Well, we're at the top of the hour. A lot of these topics were guided by the comments, and I think people are tweeting at Dylan. Dylan puts together the agenda. So definitely leave us comments, tag Dylan on Twitter. We appreciate you guys, and we will talk to you next week.
Thanks,
Good luck
guys.
with the kid.
See ya.